welcome. Thank you for getting a little bit of extra energy here as we head towards the final stretch run. And to talk about this most recent stretch run, I have two absolute superstars and good friends on the stage with me. To my far right, V. Lee, who's the general counsel of Anchorage Digital, the first and only OCC charter crypto bank that is one of Multicoin's custodians, and Rebecca Rettig, who is a repeat offender here at the Multicoin Summit, who is the chief legal officer of Polygon Labs, as well as a senior counsel at Arcturus, which is one of the great specialist crypto firms. So it's been, and for those of you who don't know me, I'm Greg X. I'm the general counsel of Multicoin, been here for about 3.5 years. This is the first time JR has let me on stage, so pressure's on. And pressure has been on for the last month. Obviously, we're here to talk about what happened 2 weeks ago, but more importantly, we're here to talk about what happens over the next 2.5 months, or 2 months, and then the next 2 years and 4 years after that. So, V, this has been a really difficult time for crypto over the last 2, 3, 4 years. And a lot of the focus post-election has been on all of the stuff that Gary Gensler has done in particular, not him alone, but that has really harmed the industry and also galvanized the industry. What does it look like next year, January 21? What happens with the SEC and the various rulemakings, investigations, Wells notices, and litigations? What can we expect? And you were at the SEC in the Division of Enforcement for 5 years. So tell us your perspective on what to expect.
Yeah, I was there, and I was actually there the last time that there was a change in political party and administration. So I actually was involved in that process. So, obviously the enforcement first approach that the SEC, and not just Gary, but this obviously predated him, this enforcement only approach has really led us down a road where it's not going to be easy to unwind a lot of that if the new SEC leadership chooses to take a totally different approach, which is what we expect, right? There's not a lot that the SEC can do in the short term until a new chair is in place and that party has the majority. So the SEC is very limited in what it can do until that happens, and of course the timing of that is always unpredictable, right? So as far as pending Wells notices, it's possible that the current leadership could go through with those cases and decide to bring charges. I find that unlikely, just given the results of the election. And then when the Republicans take over in leadership, I don't expect them to pursue at least the cases that don't involve fraud or misconduct like that, just the pure non-registration cases. I don't expect them to pursue that. What can happen right away, and probably will happen, is once the president-elect is in place, he will appoint an acting chair, right? So one of the 2 Republican commissioners, either Uyeda or Peirce, and that person can actually appoint an acting enforcement director right away, and that's typically what happens. That enforcement director, if the new leadership decides to take a different approach, that enforcement director can do things right away that would have immediate impact, right? So for existing litigation, like litigation that is live and active right now in courts being considered by a judge, the acting enforcement director can ask the court to pause those cases, and most likely the court will grant that. What cannot be done until there's a Republican majority, until the chair is in place, is that cases cannot be dropped, right? Because that requires a majority vote of the commission, just like the decision to bring the case in the first place does. Also, there are a few pending rules that might impact crypto. One is an amendment to the definition of an exchange, and then the other, of course, is the safeguarding rule. If those are implemented by Chair Gensler, it would also require a majority commission vote to withdraw those rules or overturn them. And so there's only so much that can be done until there's a chair in place and a Republican majority.
Yeah, and then when we have the new Congress in place, another thing that can be done is a CRA action, so a Congressional Review Act, which we saw with SAB 121, where both the House and Senate passed a repeal of this staff accounting bulletin regarding public companies holding customer crypto. President Biden vetoed that CRA repeal of SAB 121. But we also could, in theory, see a Republican-controlled House, a Republican-controlled Senate, possibly with some participation from Democrats as well, pulling back some of these more aggressive rules. And certainly both the exchange definition and the safeguarding rule would have a really, really big impact. Rebecca, what?
Can I say one thing on that, though? That's if they're passed in the next 2 months before President Trump comes into place, and that we have an acting Republican chair and an acting Republican director of enforcement and other people in other departments. I would be shocked if the first thing a new SEC chair does is codify a rule that was brought about under this past SEC. Mm-hmm. But yes, anything that happens in the next 2 months, they could probably roll back.
Yeah.
And there's, sorry, and last thing, there's actually a bunch of pending litigation by the industry against the SEC. Mm-hmm. And that doesn't require any votes to go forward or not go forward. But like the good thing is the industry has actually been, I'd say the last 2 years, very proactive in terms of trying to make their point of view put forward proactively in courts. And so those aren't going to get dropped and will continue to be litigated until I think the industry sees some positive change. Sorry, I didn't mean to interrupt you.
No, no worries. And there is some benefit to, there's some risk, but some benefit to the courts actually bringing decisions here. And certainly the industry being on offense is probably selecting the right jurisdictions and the right fact patterns, whereas the SEC has been quite intentional in picking the worst possible scenarios there. So let's talk about the SEC again, just from the next 2 months perspective.
Okay.
We have a new president and administration that has promised that we will have pro-crypto bureaucracy and agency leadership. Walk us through, Rebecca, what's going on in transition? Not specific names here or there, but rather what's important for people in the room in the industry and people like us who sit on the legal and policy side, what we're thinking about and watching.
Great question. So the next 2 months, I would expect the same as, unless Chair Gensler steps down. There have been rumors about whether that's actually going to happen or not. But assuming that Chair Gensler is still in place through President-elect Trump's inauguration, you can expect more of the same. Just from my vantage point as outside counsel, I can say that the SEC is not slowing down in terms of serving Wells notices, in terms of trying to negotiate extractive settlements with clients. So same playbook that's been going on. And I think they're trying to run out the clock. So I would say now is not the time to take your eye off the ball or do anything big. If you had inbound from the SEC and haven't heard from them a long time, make sure your name stays out of the press for the next 2 months is probably the best case for everybody here.
Yeah, and right now down at Mar-a-Lago, we have an agency selection process, if you will, which is going to start top down. So everyone is going to be, the headline names are the agency heads, but there are other positions that will get filled, in the case of the SEC, by the new chair, rather than by presidential appointment and confirmation. But in general, when we think about the different branches, different divisions of the executive branch, everyone thinks of who's going to be, the Secretary of State, and who's going to be Secretary of Treasury, who's going to be, head of the NEC, things like that. It's not just the top line names, and other appointed positions and confirmed positions matter, particularly at Treasury. Do you want to talk a little bit about what the landscape is and why the SEC may have gotten the most headlines, but may or may not end up being the most impactful to our industry?
Yeah, look, I think unquestionably we need to see change at the SEC. It's just been just such a sea of aggression in terms of, and I think definitely scared our industry in many ways and obviously hindered progress significantly. But the Treasury Department is, I would say, probably the most important after the SEC or on equal footing for crypto. And it actually will remain as true in a Trump administration because what Treasury is really looking at is national security questions, and I don't think the industry has solved them yet. And I think Republicans are going to remain as vigilant about national security as what happened under the last administration. Now, the approach to crypto, and so to Greg's point, what falls under Treasury is OFAC, which deals with sanctions, right? And that is the office that imposed sanctions on Tornado Cash in the last administration. FinCEN, the Financial Crimes Enforcement Network, which does, it has its own enforcement arm as well, and then a number of other offices like terrorism and financial integrity? Yeah, something like that. And other sort of undersecretaries who are looking at different types of issues relating to national security. Crypto falls in so many of these buckets. The privacy question remains. We just saw a letter this week from a number of Democratic congressmen, many of whom sit on the subcommittee in the House Financial Services Committee on digital assets, about the fact that Tornado Cash is still being used and that they would like FinCEN to finalize their proposed rule, so like the exchange rule we were talking about, that would put new requirements on money transmitters or those financial institutions subject to the Bank Secrecy Act for interacting with mixers. The real problem with that is they don't just mean mixers the way we think about it, Tornado, but the definition of mixers there would capture like almost every ZK technology and just had a really, really broad definition. So Treasury can actually, and the other, I think, more nuanced and sensitive part with Treasury is when you go to challenge it in court, and the argument from the agency to the court is, well, we need this for national security. That's a high bar to pass. It's very, very hard to come back with an argument and say, well, this is a countervailing benefit and we need X, Y, and Z when you're arguing against national security. So Treasury has a lot of power, and so we need to ensure that we have people there, both who actually really want to protect the U.S.'s national security interests, but also who understand crypto and where the correct points are for any type of regulation or rules and the like.
So on the national security issue and the BSA side, I find it ironic that the first regulation of crypto anywhere in the world, the May 2013 FinCEN guidance, actually came up with a pretty simple way of looking at crypto and saying, yeah, this doesn't conflict necessarily. We can manage this with gateways and choke points from fiat to crypto. Obviously, things were more simple in Bitcoin, more complex now on smart contract platforms. But what's really good is I think we're starting for the first time to get people on Capitol Hill that understand that national security doesn't mean, okay, lock everything down and don't come to me with ideas. If someone who is going to raise the national security, ring the bell, saying crypto bad, it's not just going to be simply accepted. You know, one of the Senate candidates that most gets this is a guy in Pennsylvania, Dave McCormick, who I applaud Kyle and Tushar in particular, as well as others, for really strongly supporting, and we were very happy to see his win. Folks like him and Senator Haggerty are very attuned to the idea that crypto is not anathema to national security interest. And there are ways to build up regulation and compliance. And in fact, what we've seen over the last 3 years of pushing everything offshore is, in fact, the thing that is anathema to national security interests.
Yeah, and Senator Haggerty is a good example, but I do think that, especially in the Senate, people understand that stablecoins are also really important to national security interests in the United States, and so there's positive movement in that direction too, and Treasury is obviously very interested in stablecoins because think about the US dollar, so.
Yeah, and you see this, V, as, again, the only OCC chartered crypto entity,
Yeah.
and you've had to build a strong BSA program and have to think about this as one of those centralized parties that does integrate and you have folks like, so how does Anchorage and how do you think about the national security issue when you're talking to your regulators?
Yeah, so Anchorage is in a very unique position, right? Because, I mean, it's crazy for me to say this given how long the industry's been around. We are literally the only crypto company in the US that is federally regulated. And it's because under the last Trump administration, we had more forward-looking banking regulators. So, to your question about what other agencies we're keeping an eye on, certainly the banking regulators, right? I expect under the new administration an end to choke point 2.0 for starters, and just more forward-looking regulators, right? So the OCC at the time, they looked at us and they said, look, crypto banking has never been done before at scale. We don't really know what that should look like, but we are going to work with you to try to figure that out. And that's what we've been doing for the last 3 years, right? So I think, it's an interesting case study of it can be more of a partnership and not so hostile. And it's allowed us to keep our customers safe while actually building a very successful business. And so it can work. And so that's the kind of approach that I'm hoping to see, not just at, the OCC, but also the SEC, obviously, the CFTC, right? That's, people aren't talking so much about who the new leadership of the CFTC is going to be, but that might actually be more important in some ways than who's at the SEC, because we don't know what Congress is going to do with respect to market structure, right? I think the market structure bills that we've seen to date were, at least in part, products of political compromises that had to be made the last few years, right? So, there were Democratic senators and Congress people who would vote against anything that Chair Gensler didn't like. That's not a problem anymore. And so one thing I think I'm really curious to see is Congress still going to build off of that basic conceptual framework that we have now, or is this a chance for them to start from scratch? I actually hope they choose the latter, because I think there is more political flexibility now to just actually do what's good policy.
And agencies that are more willing to work and actually be judicious in assessing what rules and regulations should look like.
Yeah, and we do have to start from scratch because nothing makes sense. Like you can see in the United States, fine, we've had this regulation by enforcement, which means we've all gotten to go to the courts, and those opinions all conflict with each other. I mean, some come out the same way and some come out different ways, and we've seen those all across the district court, and the SEC doesn't like answer in one court, and they'll take the same issue to another court to see if they can get a different answer, and that is not a positive way to make good policy. And nothing has worked. And they've changed their theory a bunch of different times, and it hasn't worked. So we should, to your point, start from first principles and think about. Look, the other thing I think we all should really be, if everything's the dust settles the way we're all hoping it will in terms of the SEC and Treasury and CFTC and but so at all the relevant agencies, is what are the practices in our space that are good and helpful, and what are the ones that actually are not moving the space forward, and being willing to capitulate on some of those. Do we think listing agreements as exchanges are good? Not putting on a judgment on that. I'm just saying that's a tough practice, especially for young startups who want to launch tokens and things like that. And so we should really think about where the guardrails should exist. Disclosures for tokens, that seems like a low bar, and where does that fall? Should that fall in the SEC?
Yeah.
Should it fall somewhere else? So I think just taking a step back and starting from the beginning is a good idea.
I actually have kind of a hot take on who we would want as an industry as SEC chair. Obviously, we don't want anyone who is anti-crypto, but I actually think that we're potentially better served by an SEC chair who doesn't care that much. And the reason I say that is because I think an SEC chair who cares a lot about crypto is going to want as much jurisdiction over crypto for the SEC as possible. And we dealt with that for the last 4 years, and that's not necessarily the best outcome when you're talking about Congress, right? I I think this applies to chairs of any agency. They should be happy for Congress to decide how much jurisdiction they get.
Well, quite frankly, that's what the Supreme Court said too.
Right,
that
exactly.
Actually, Congress is the only one who gets to decide how much jurisdiction
Yeah,
they get.
so I think someone who's like neutral and open to it, right, but happy to let Congress figure out how crypto should be regulated, even if that means the SEC has little jurisdiction. So.
But to build on that, I don't think you're saying, since we talked about this before, that someone at the SEC who doesn't care about crypto means we get to just do whatever, the industry gets to do whatever it wants for the next 4 years. I think as an industry, we should want something. What it is, we'll have to decide what I think we should do baby steps, because there are certain things we know how to do, like in theory, regulating exchanges, although giving the CFTC brand new jurisdiction over spot markets is really blowing a hole open in the CFTC's jurisdiction. And a lot of times we talk about it like, yeah, of course, let's just put it at the CFTC. But like, there are a lot of implications for it. And keeping it even narrow to like digital assets is not just keeping it to crypto. I mean, almost everything is digital, right? Like, I always think about SpotX, where you can like trade shoes at the same speed that you can trade digital assets. And shoes are commodities, theoretically. So anyway, I think we should do baby steps along the way.
Pretty sure Chair Gensler testified that Yeezys may have been securities.
Okay, well.
That and Pikachus. And the CFTC language in all of the market structure bills to date have had issues along that line of, some of the challenges the CFTC has is they're not funded to facilitate spot market oversight. They don't deal with spot markets. They deal solely with derivative markets and clearing venues. They happen to be blessed with the world's greatest SRO, the NFA. I'm a huge NFA fanboy, which that's not something you often hear.
Like you're the only person who has ever said that.
They're a great agency. There's complications because spot crypto also looks nothing like commodity interests. And so actually assigning authority to the CFTC is difficult. And then because there was, I think, a lot of congressional distrust of what regulation out of the CFTC or SEC might look like, you saw these market structure bills, which, while expertly crafted, were way too complicated and precise and prescriptive. And I think what we will likely see out of something is probably something that creates an avenue for broader control within the rulemaking process. But let's also just talk for a second, when are we going to see legislation? Kyle talked this morning that we hope to see stablecoin or market structure really pick up sometime in Q3 or Q4 of next year. That leaves a lot between now and then. So what happens in there? What happens in reconciliation? And what happens to these bills before they're perhaps introduced in the second half of next year?
I mean, what happens to something like Fit 21 or the...
Well, the general process altogether. What are we going to see out of market structure legislation and when?
So I'm going to take the easy path forward, which is, I think, stablecoins depends on who's in Treasury, and to your point, how much they care. There is the tether issue, for lack of a better word, and it depends on how much people are aligned with this idea of a U.S.-based company putting forward sort of a preeminent U.S.-based stablecoin, and U.S. dollar-backed stablecoin needs to be protected. So I think stablecoins are a little bit up in the air. For a while, even just like as of last week, I thought like stablecoins were a definite, and I just feel like the landscape remains shifting. I'd be surprised if we see Fit 21 reintroduced for a vote. I think that there is some interest around there, but I just don't think it's going to happen. And I just don't think there's an appetite from Senator Stabenow, who's on her way out and has just been replaced, to go through the process of putting forward a draft bill, which nobody's ever seen. I think, she worked on the first version of the bill, which people call the FTX bill, and I think there was enough public pushback there that I'm not sure that's what she wants to deal with on her last 2 months leaving office. So I think the real question is, what can the industry do, not just in the next 2 months, but let's say in the next 3-4 quarters, or even 2 quarters, which is try to come together on top 3 issues that we think are really important. I think disclosures around tokens is really important, and maybe regulation of exchanges in a way. But
so, Rebecca, you were talking about lame duck. I'm talking about for 2025.
Yes, but I'm talking
Yeah,
about moving
yeah,
into
okay.
2025
Yeah, yeah.
too, which is, yes, we might see stable coin. I mean, I don't think we'll see stable coins in lame
Until
duck.
the-
I don't think we'll see market structure in lame duck. I think it's a real toss-up whether we see stable coins or market structure first in 2025.
Yeah. And then 2025, for those who don't know, there are a lot of people in the asset management industry in this building, so I'm sure that a lot of you know, a lot of the tax provisions expire, particularly from Tax Cuts and Jobs Act. So a lot of the focus over the course of the next year is going to be that. Some other pressing
And that's
issues.
what you mean by reconciliation.
Yes.
That's where the reconciliation bill is important, is on the tax provisions.
Yeah, so we'll likely see crypto touched on lightly, possibly on like-kind exchanges. I know we'd like to see some more certainty around wrapping an asset or a liquid staking token. I think we'll see some more certainty on finally getting a de minimis exemption for capital gains on commercial transactions. But we're not going to see the more complicated stuff until probably the second half of the year. But that doesn't mean that industry isn't going to be working. And to that front, V, what are you most excited to get your teeth into over the course of the next year from a policy perspective and really work on? And I'm asking you the same, so don't giggle too much.
I think the Bitcoin strategic reserve is pretty cool.
Yeah. Well, okay,
We'd love
so
to see something like that. Just kind of out of the gate. Like, I think it would be a really strong messaging.
So Kyle asked Senator Haggerty about this, and he expressed that he wasn't sure. Do you think that Congress will approve open market buying of Bitcoin, or simply President Trump using executive authority to tell the federal marshals to stop selling the enormous amount of Bitcoin that the US government actually currently holds from prior seizures?
Yeah. Yeah. So he could do that, which would allow them, obviously, to build up a stockpile. Another tool he potentially has through executive order is to tell Treasury to use something called the Exchange Stabilization Fund, which is, it basically just gives Treasury the power to engage in certain transactions of foreign currency or other assets in order to stabilize the dollar. And so he could do it through like an instrument of credit where they're receiving Bitcoin as on one leg of the transaction, and then they could build up the stockpile that way. That way they don't have to wait for legislation, which obviously, could take a lot longer. But I mean, in all seriousness though, although that is an issue that we are watching closely, we're just hyper-focused on like the banking regulators. We've been spending a lot of time doing education on that. Just, again, because we are like the only company in this space that has the experience that we do, being a federally regulated crypto bank. We're looking at the banking regulators. I mean, we obviously want to see an end to choke point 2.0, like I said. We're waiting to see if they're more open to banks engaging in more crypto activities, right? Like the guidance that the banking regulators put out last year just basically put a stop to all that. But banks engaging in their own crypto activities, including things like engaging with public blockchains, which they've all been scared to do. We're like looking at that sort of thing really closely.
And on the banking regulator side, also, we haven't talked about that, but there is a laser focus on Operation Choke Point 2.0. I think Congressman French Hill is taking a particular interest in that, and I think we'll definitely see a good number of hearings and drilling down on that, although banking regulation changes tend to move slow as molasses, as Harper Lee once said.
Yeah, I have a spicy take on that, which I actually think, and nobody's looked at this yet, including myself, but I thought of this the other day, which is, I wonder if we can use Loper Bright, which is a Supreme Court case which curbs federal agency overreach. That's a very basic TLDR on it, to somehow, and look, the banking regulators, you know this better than anybody, have broad discretion to figure out where risk comes from, ensure that banks stay stable, but to otherwise have particular guardrails around how they can make determinations of risk so that we don't keep seeing choke points over and over. So I think there may be something there, and I've started sprinkling that through the hill.
And very quickly, also, any other particular passions that you're excited to work on for the next year?
I do want to think about that a little. I do want to work on the national security question because I want to come up with solutions that work for the industry and they're not mapped one-to-one like putting the BSA onto a DeFi protocol. The last thing I actually will, and you probably feel this too, which is there are a lot of new faces coming into Congress, a lot of whom had a lot of support from the industry, but who may not be as savvy on crypto as some of our longtime advocates. And so I'm actually looking forward to engaging on education to make sure that the people who the industry has really embraced can really be our best advocates in Congress.
Yeah, and to that point, three things I'm really excited on. 12 years ago, the ETF effort was what brought me into crypto. Excited to see how that changes in this upcoming year. Very excited to see the affirmation of bipartisanship in crypto. We came out to a particularly partisan dance, but the reality is crypto is a bipartisan issue, and working with newly elected Democrats, fair shake was 41 for 41 in electing pro-crypto candidates as of election week. The majority of those are actually on the Democrat side of the aisle. So we have a lot of new faces as well as existing ones who are eager to work with the industry and remind them that crypto is very much a bipartisan thing. And then the final thing, and JR will thank me for pointing this out, we are going to be launching a blog on policy within the Multicoin website, which my colleagues, if you've not met them before, please look out for Dan Leonardo, our CCO and Deputy GC, and our Deputy GC, Jay Stolkin, and of course, the one who runs the show, our Director of Legal Resources, Legal Resources Manager, Debbie Ferraro. And with that, I want to thank both of you, and of course, all of you for joining.